Every economy has a moment when things look promising but also uncertain. India is in that moment. The economy is growing at its fastest pace in years. Inflation has fallen to levels no one expected, and yet the rupee is at its weakest point ever. We've told you about this on the show, and tonight we want to tell you about a new development which ties these trends together. The Reserve Bank of India, or RBI, has taken a major decision. This is India's central bank. It manages the country's money, it sets the rules for banks, and it decides how costly or cheap borrowing should be. Today, the Reserve Bank has made a call on that system. They have decided to cut the repo rate. The repo rate is the rate at which banks borrow from the RBI. Think of it like this. When a bank runs short of money, it borrows from the RBI. It takes a loan. It has to pay an interest on that loan, and that interest is called the repo rate. Today, that rate has been cut. It has been reduced by 25 basis points. Earlier, it was 5.5%. Now it is 5.25%. Now, it looks like a small drop on paper, but it has a big impact on households. We'll get to that in a bit, on how it impacts you. But first, why did the RBI cut the repo rate? Because India is in the middle of what the RBI governor calls a rare Goldilocks period. What does that mean? It means that the economy is not too hot and not too cold. It's just right, just like the Goldilocks story. India's economic growth is strong, prices are cooling, and that gives the RBI room to support the economy. Take a look at the numbers. GDP grew by 8.2% in the last quarter, in the last 3 months. It grew by 7.8% in the quarter before that. Income tax cuts have boosted demand. People can buy more because they have more money. GST rate cuts have made goods cheaper. GST is the goods and services tax. It was slashed in a big way recently. All these factors have helped sustain growth. The RBI now expects the GDP to grow by 7.3% this year. At the same time, inflation has fallen sharply. Inflation is the rate at which prices rise. When inflation is high, things are expensive, so your money buys less. When inflation is low, your money holds more value. And right now, India's inflation is at record lows. It was just 0.25% in October. The RBI's target is 4% inflation. It was 0.25. And they expect the full year inflation to be just 2%. Now, this combination of high growth and low inflation is rare. And that is why the RBI has room to cut rates. Listen to what the governor had to say.
Despite an unfavorable and challenging external environment, the Indian economy has shown a remarkable resilience. It is poised to register high growth. The headroom provided by the inflation outlook has allowed us to remain growth supportive. We will continue to meet the productive requirements of the economy in a proactive manner while ensuring macroeconomic stability.
But here's the other side of the story. The rupee has been under pressure. We've been telling you about that too. This week, the Indian rupee crossed the $90 mark. So $1 costs more than 90 Indian rupees. That's a record low. How does the RBI view this? The governor said they won't target any specific level for the rupee. The market decides the value of the rupee. They did try to support it earlier, but now they won't. The RBI, he says, only acts when there is abnormal volatility. In other words, they won't intervene when it comes to the rupee.
Our stated policy always has been that we allow the markets to determine. We don't target price levels or any bands. We allow the markets to determine the prices. We believe that the markets, in the long run especially, are very efficient.
He pointed to India's strong fundamentals. India has forex reserves of $686 billion. Forex reserves are a country's emergency savings. They help you pay for imports. They help India stay stable during global shocks. Long story short, the RBI says that the Indian economy looks robust, so they've made loans cheaper for the banks. What does this mean for you? What does this rate cut mean for you, the consumer? Your loans become cheaper because banks are paying lower interest rate to the RBI, so they charge you less for your loan. This can support housing demand. Car loans and personal loans may become more affordable. But again, here's the other side. You may get lower returns on your savings. Fixed deposit rates may fall. But if you look at the overall picture, the RBI is supporting growth. It is watching the rupee. It is preparing for global uncertainty. Like I said, a delicate moment for the economy and a measured move from India's central bank.
I rose from the army with medals on my chest. I spoke of freedom from colonial chains, but I tightened my own. I filled prisons with ghosts. Nearly 500,000 people were butchered under my rule, and I trusted only my paranoia. I gave myself grand titles. I claimed to be Africa's strongman. History calls me something else, the dictator. Who am I?